please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Govind Shrikhande, the MD of the company, joins in now. First, Mr. Shrikhande, if I may start with the decline in revenues, down 7% in the March quarter. The key reasons, and when do you see revenue growth improving?
So one issue that you'll see during the quarter is we had preponed our sale this time around in Q3 by about 7 days, and during Q4 we actually curtailed the sale by about 10 days. So both these combined, you will see an impact on the like-to-like growth. We are also seeing the continuing impact of the renovation of certain stores and renovation of certain malls that have been undergoing customer entry challenges, sales challenges. That still continues, and that will recover from Q2 onwards in the coming financial year. But I think our focus in the last 2 quarters has been on the financial restructuring, and we believe that we have been able to pull it off pretty well.
Well, sir, so on a like-to-like basis, growth in FY19 should be what? Around 7.5 to around 8%, as you'd guided earlier?
So Q4 was actually a decline of 4% in like-to-like growth. And as I mentioned, the factors were related to sale preponement as well as the renovation undertaken in multiple stores and malls. Going ahead, we believe the next year should be quite okay. And we are targeting a 7.5% like-to-like growth throughout the year. Although Q1 could be slightly slower because Q1 last year was a very high growth of 18% because of GST. GST that was bought in July had a huge impact on sale in June because the sale was preponed. So other than Q1, we believe through the year we should be ending at 7.5%. Q1 should be slow.
Okay, Q1 should be slow, but things should pick up and end FY19 with a 7.5% growth. You've paid debt much faster than the 300 crores that you had earlier guided. You also said that the company will be debt-free by Q3 FY19. Would you look to prepone that guidance?
I don't want to change the projection right now. We believe, yes, for the full financial year, we should be debt-free. Whether it happens in Q3 or Q4 depends on the sales number, really. But if you look at fundamentally, we have been able to reduce almost 500 crores of debt in the last year. And as a result, our net debt today position is only 67 crore. So that position is very, very good. And it has a direct bearing on the way the profitability changes and also the exit out of multiple JVs and subsidiaries. That is also impacting the profitability at overall level.
Well, sir, so double-digit revenue growth in FY19, that's on the cards?
Yes, likely, because we are also targeting to open about 5 new stores.
Okay, and on margins, what kind of improvement can the company deliver?
So we believe that we should grow the margin by about 100 basis points during the whole year.
Well, in the longer term, can your margins touch double digits, say in the next, 4-5 years?
Maybe shorter than that, because we believe we should be able to gain 100 basis points for the next 2 to 3 years. So we should be able to hit about 8% before 2020 at EBITDA level.
Okay. If you could tell us what's the issue with private labels, because their contribution to revenue hasn't improved as was earlier projected.
So private labels, we have struggled during the last whole year, including Q4 as well, and we believe the struggle will change into positive momentum starting second half of this year. We have taken up a whole cleanup of private brands, so you'll also see a lot of discounting that we have done in this quarter, which has also led to drop in margins as well. But we believe it's the right thing to do for future, and Q2 onwards we should start seeing the traction up, but second half definitely we should be back on a track of 9.5% plus share of private brand. Definitely the long-term target would be between the 12 to 15% over the next 3 years period. This quarter we were below 9%.
Well, sir, so what new brands can the street expect tie up with? In fact, your new CEO has handled brands like Burberry and various other Brooks Brothers, etc. in the past. Anything from the luxury space that's on the cards?
These are all luxury brands, so not very easy to get them, and some of them are already in India, and they do operate generally through standalone stores, not generally in shop-in-shops. But yes, we will make an effort in trying to bring in new brands into the store, and yes, that effort is on right now.